Slide, we are going to discuss about the insurance and the principles of insurance. So, what is insurance? Insurance is a contract of indemnity. That means the insurance is a contract between the insurer and insured. Who is insurer? Insurer means the company, LIC, life insurance company, or any other company which is taking the insurance policies. And insured means the person or the party or the companies which are insuring. That means the clients or the insured. Here the agreement is there. That means the insurer will promise to pay the loss, compensate if the insured pays the premium and takes the policy. On such goods, the insurer will see that the compensation will be made to the insured in the event of any losses sustained during the course of its period. So now let us discuss about there are 7 basic principles of insurance contract, or insurance, you can say principles of insurance. The first one is utmost good faith. Here there is a faith, there should be faith between the insurer and the insured. That means each should believe. Belief is very much important here. If anyone tries to cheat the other party, that is not a good faith. So, whenever an application is filled up, all the formalities should be done in a perfect manner, and also whatever information is provided there, it should be correct. Whatever information provided by the insured, he should provide all informations in a correct manner, because the insurance company believes the information provided by the insured. If any false information is made, and if anything happens during the time of claim, the insurance company will stop the payment because false information is provided by the insured. So, that is the reason why we say that there should be good faith. The insurance company believes that the client is giving or providing all the information in a correct manner. Next one, insurable interest. What is insurable interest? Only those people can do insurance if something goes or takes place, if something happens, he is going to get loss due to that particular incident. That means everyone cannot take insurance for take policy on others, because the insurance company will ask you what type of interest you are having in that particular insurance, why you are making that insurance. Are you going to get any loss directly? For that reason, to compensation purpose, you are doing insurance. So, you have to insure only those policies, you can insure those businesses where you are going to sustain loss directly. You cannot insure for somebody's property. You have to insure for your property. That should be there when you are taking up an insurance policy. Next one, indemnity. According to this one, insurance means not for making profits. The main aim of the insurance company is to see that before incident, before accident, how the client was, he should be kept in the same position after something happens also. For that, the insurance company compensates the loss. In any case, you cannot make any profits in the insurance company. Only when you do insurance, that means insurance is providing a security that in the event of any losses sustained in the due course of time, in the period of that insurance, the insurance company comes to a rescue and saves you, and see that you will be put in the original position. Before the incident happened, how you were, in the same position you will be put. That is what here in the indemnity is discussed. Then proximate cause. What is proximate cause here? Proximate cause means for what purpose you are insured, that insurance you will get. For what purpose you are insured, if anything happens to that particular problem, the insurance company will compensate you. Suppose you did a fire insurance, but due to earthquake, your factory was destroyed. The insurance company will not pay, because that accident has not took place due to fire. If the accident has taken place due to fire, the insurance company pays the amount or compensation. That's why I say proximate cause. The cause should be definite. You cannot claim for everything. only for particular purpose. Suppose you do the vehicle insurance, if any accident takes place, you will get the insurance. That's all. Now, subrogation. What is subrogation? Subrogation means it is very little bit confusing to understand. Here, once the insurance company pays the amount on the property, if full property is destroyed, if the insurance company pays the amount for the full property, the remaining, whatever property is remained, that property, the owner will be now insurance company. For example, better to understand, suppose you are having a vehicle got damaged, badly damaged, it cannot be repairable. So now the insurance company will provide you a car of that model. And after providing you the car of that model, this remaining the damaged car will be taken by the insurance company. You don't have any authority. The insurance company is now the owner of the damaged property. That is what the subrogation says. Then contribution. Here remember, contribution, some insurances, some candidates or some business people want full compensation. Because generally insurance company pays 80 to 90% of the compensation. So some business people wants full compensation. In that way what they will do, they will do insurance in many companies on same subject only for one or two companies. So insurance companies. So in case of any accident taken place, how much premium the insured paid, accordingly both the companies will compensate their share of loss to the insured. So that is what we say the contribution. Then loss minimization. Remember, it is a duty of the insured also to see that he has to minimize the losses. That means he cannot keep quiet. If the loss is taking place in front of him, he has to do something to prevent that loss. Because the insurance company will ask you the question, what type of measures have you taken to prevent the loss? Suppose you have insured the warehouse, but you are not having the CC cameras and you are not even locking properly, you don't have the watchman there, then how come the insurance can pay the compensation? The insurance company says that you take all the responsibilities, you take up all the required, how to minimize the loss, you take all the required measures. Then if anything happens, the insurance company will pay the losses. Now we have to describe these points in this manner. The principle of utmost good faith, then the principle of insurable interest, and the principle of indemnity. These you have to explain in this one, and one more slide is there after this. And this is the principle of proximate cause and the principle of subrogation. After this, one more slide is there. These things you have to explain the points in this way. You can write in your own words also, but you have to explain the points. Then this is the final slide in this question. The principle of contribution, then the principle of loss minimization. So you have to understand minimization means it's the insured's responsibility also to see that the loss he should see that to minimize the loss, he has to take some steps to control that loss.